You are listening to Productivity Straight Talk with your host, Amber De La Garza. Amber is a sought-after productivity coach, trainer, speaker, and writer who gives entrepreneurs the straight talk on personal productivity. No BS, fluff, or overused jargon. Just actionable strategies to get results and succeed in business. And here is your host, Amber De La Garza, the Productivity Specialist.
Welcome, and thank you for listening to Productivity Straight Talk. Today is episode 246. What story is your P&L telling you? With Gannon. If you're a business owner who wants to learn effective business strategies, improve your time management, and elevate your productivity to maximize profits, reduce stress, and make time for what matters most, you're in the right place, and I'm so glad you've joined me. I'm looking forward to you meeting our guest, Gannon. Anne is a certified public accountant who specializes in providing a monthly accounting and tax service that works for business owners, not just the accountant. What makes Anne unique is that she is anything but your typical accountant. After all, she spent her early years chasing the dream of professional golf. In 2004, Anne turned pro, but quickly realized as she drove around the country that summer, listening to CNBC and reading the Wall Street Journal, that her true love was economics and business. In 2012, Anne left the large public accounting firm to build her own practice, and in 2016, Anne founded the Largo Group, a firm specializing in over-delivering the entrepreneur and business owner. Since 2016, the Largo Group has grown to provide accounting assistance to businesses and individuals nationally. In today's episode, Anne and I will cover what a profit and loss statement is, where the numbers come from, how often you should look at your P&L, the revelations a P&L can provide, the important numbers you need to know, what the IRS could care less about, the most powerful thing you can do as a business owner, and so much more. Now, before we jump into today's episode, I do want to apologize for the quality of this recording. It is definitely not our norm, and I take pride in the quality of audio we put out. But in this case, I feel that there was so much value discussed in this interview that I wanted to still publish it for you. So I want to thank you for your understanding, and I hope you enjoy, even though the audio interview between the two of us isn't quite up to my standards. But you'll still enjoy, and I believe it'll be incredibly valuable. And now, let's get to the straight talk. Welcome to Productivity Straight Talk. Anne, how are you doing today?
Great. Thank you so much for having me.
Yes, I'm actually looking forward to this conversation. And I don't know, a lot of people get excited about talking profit and loss statements and financials. But for me personally, when I understood the power of what a P&L can tell us and that I wasn't scared of it anymore, it really changed a lot for me in my business. And so my hope is for our listeners today is that we're able to talk about why does everyone say you need to understand your P&L and get a regular P&L? And I thought you'd be a great guest to just explore this topic and, dive into what help is out there for the small business owner that says, I actually don't look at my P&L. Who do I go to? What are the professionals? So that's what we're going to talk about today. And that really is an exciting topic. And I hope our listeners think so. Before we dive in, Anne, why don't you share a little bit about yourself that we didn't learn in your official bio about why am I talking to you about P&L and, what are you up to?
Yeah, so I'm not your typical accountant. I grew up playing competitive golf. I played a year professionally. And I think having that background of athletics gave me an interesting outlook into accounting, that accounting I see really as a skill that you learn, but it isn't something that you're born with. But with that skill, I really look at it as the need is out there to communicate what we know as accountants to small business owners. And I feel like that is really what is missing a lot of times in that relationship, is that you pay someone a lot of money to do their tax return at the end of the year, or maybe, estate planning, but then you kind of miss that education piece or really knowledge so that the business owner fundamentally understands their business so that they can make it better. So that is really my passion, is helping business owners really better understand their numbers and really putting the ownership with them so that they are ultimately in control and that you're not giving up control to this other person, once a year just to get your taxes done.
That's right. I mean, I've seen train wreck after train wreck of just giving up kind of just responsibility or control, just saying, oh, the professional insert name, it knows what they're doing. I don't need to know. And it's just not a good place. And what I find is it's not a very empowering place for the business owner to give up control of understanding their numbers. And, we've never met before, but you just said like the perfect intro that this is a skill set that can be learned. Yeah. I am a huge proponent of that. My special series podcast I was talking to you about before we hit record is The Accidental Business Owner. And the whole series is about learning the skill sets to be a business owner.
I love that.
There's 30.2 million business owners just in America. And I'm guessing most of them just didn't grow up as a child saying, I'm going to be a business owner and I'm going to learn the skill sets. We kind of accidentally ended up because we're skilled at the thing we do. We deliver a service, but then we wake up one day and we're like, we have to understand our numbers, like financials or leadership insert. So we're definitely talking about today the numbers.
Yeah.
All right. So why don't we start very basic and we'll just start up from there is what is a profit and loss statement? And I'll let you take it from there and we'll just have a conversation about it.
Right. Well, first of all, anyone who's cringing, don't cringe, right? The idea is that we're going to make this something that is useful. So in, the accounting terms, the profit and loss statement is designed to show you your operations for a period of time. So if you really dig in on the accounting, what it's doing is matching your revenue from your expenses. I think what is really hard, especially in service industries, is if there is a lag between money when it's collected and when it's earned. So if you work on a project for say 30 days and you had, say marketing expenses with it or supplies or any of your other expenses, that revenue may not show up until the following month when that person ultimately paid you, right? Because it took you 30 days to earn the money, then you billed them at the end of the project, and then maybe it took them 30 days to pay you. So 60 days later, you have all this revenue, but 30 days before, 60 days before, you had all these expenses. So the goal of the P&L is to match revenue to expenses as much as it can. So if you really go in the weeds, that's why they call it accrual accounting, which is the matching versus cash basis. But I like to tell business owners, I don't really care what your tax return says, whether you're cash basis or accrual. As an operator, especially in service, I think this becomes very important. You really should always be looking at accrual, right? What are you earning this month versus what you're spending this month? Because that will really help some of the ebbs and flows. Because inevitably in service, you have the month that you collected everything, and then you have the month that you collected nothing, and it can be incredibly stressful, especially if you have payroll or other, rent, large operating expenses. But the more we can really get into this, what are you billing for this week versus what is it costing you to run your business this week? That's where you're going to find if it's truly a timing thing. Because again, I think in, your service world, a lot of times say, oh, it's timing, I'm going to collect it next month. But is it timing? Or maybe there really is something that's going on when we match, okay, I billed $1,000 this week, but it cost me $1,200 to run my business. Okay, now we know that's never going to make it up.
Right,
so
right.
That's really what the P&L can do if we understand. I think timing is the biggest thing to understand on the P&L.
Okay, so I love that you went as narrowed down to like this week or this day, because we often think about P&L on an annual basis. I look at mine on a monthly basis. And your scenario, your example was perfect. So, but what I also hear is the complete opposite. So many of my clients actually, charge a retainer or a deposit. And so they're like thinking they got all this money. They may have 3 to 6 months of expenses, payroll, hard expenses, things that actually they need to spend that money on, but their bank account, which is if they're not looking at their P&L and understanding like what their operating costs are, they're looking at their bank account thinking, oh, life is good right now. Right. And then wondering why life's not so good next month or the month after.
Yes, exactly. So either scenario is very true, that just being aware of what this money that's coming in is for, and then the expenses that are against it.
Okay. So where do the numbers come from to create the report profit and loss?
So I think that's a huge question. And that's probably a much more important question now than it would have been 20 years ago. Right? 20 years ago, if you were doing accounting work, you maybe would have had a piece of paper, maybe an Excel. I don't know. But that was pretty much it. And especially service business, you would have recorded your deposits, you would have recorded your expenses and whatever that net was. Well, now we have all this software, which is great, but it's also very important that we understand where the information comes from, because so many times we can look at the P&L, I would say even blame the accountant, when in reality, the information may not be going as the right thing, right? So it's really not done incorrectly. We just have to understand where the information is coming from. So as a starting point on the revenue side, the best thing to look at is my revenue coming from my deposits, or is my revenue coming from my billing system? So if you use QuickBooks for invoicing, is the total that I'm seeing the bills that I've sent out, or is it the cash that I've received? Again, this is where the ownership comes in. I wouldn't assume that your bookkeeper cares, right? And that's not to say that she or she is doing a bad job, but it really doesn't matter in the accounting world, because I'm going to take that number and I'm going to take the expenses, I'm going to reconcile the bank statement, and I'm going to be good. But operationally, you need to know if I'm looking at something that's net of fees, say you use a Stripe or you Square or something like that. So am I looking at a net number, or again, looking at something that's collections for this month? Or am I looking at, here's the invoices that were billed this month, and then I need to also be aware of collections and what I've collected. So revenue, it's a big deal in service. It's probably the biggest deal in service. And that's where I really like the exercise for our service clients to saying, I really would track the bills that you send out every week. And again, if it's a retainer situation, the part of the job that you earned this week. So if you have, a 12-week job, really this week is 1/12 of that job, and that's my revenue. And it really shouldn't be the number even after the fees. It should be the gross revenue and then the fees booked as an expense in your operating expenses. So I think that's a very good, place to start in terms of where the information is coming from. And it may be the case that it requires some manual entry. I mean, I get annoyed sometimes. People are like, well, it just comes in from the bank sheet. Well, it's probably not coming in exactly how you want to see it from the bank sheet. So we might have to do something to make it what we want to see, because revenue is so important to our business.
Yeah. Okay. So this is interesting. I love learning new things. So I charge upfront too, or my clients pay monthly. So I get large lumps of money that could be paying me for 6 months or a year worth of coaching. And I do not split it up month over month. Okay. Now, do I know what my expenses are? Absolutely. But naturally, that's got some ebbs and flows to it. So I know which clients are paying me monthly. I know what my steady monthly income is. And I also know mostly what these larger payments are going to be. Now, I'm learning here. So I'm learning for my clients here. So what you're recommending, because I'm actually excited about this, because I feel like we're going to say another special word, which would be cash flow. We're talking P&L, but what I am picking up is that we're really talking understanding our cash flow.
Yes.
And so if I'm going to say someone's paying me for 6 months of coaching, I would divide that one payment over 6 months, and it would show up, say, January, a little bit in February, March, April, May, June, so that it actually matches with that month's expenses. And then I'm evening out what I'm seeing and how I'm perceiving how I can spend my money is not these peaks and valleys, but evened out based on when I earned the money.
Yes, exactly.
Okay.
Yes.
So mine works monthly, but let's just say I was a architect or interior designer, and this project is lasting for 6 months, 9 months, and it's more in phases. So the work's not spread out evenly. It may be front loaded on the front end. You're not really billing a lot of hours, maybe for a couple months, and then it goes into construction and I'm billing a lot more hours. How would somebody, spread that out? Would you say it's better to at least average over 6 or 9 months? Or do we really look at how many hours are actually billed to that P&L? I mean, not to the P&L. I know that question. I asked the question.
No, but yeah, to book it on the revenue side. So
Yes.
I really think, first let me say, I'm of the mind that we want it as simple as possible for the business owner. So anyone listening, don't think that I'm saying I'm adding 8 hours to your weekly job to go through each job and book it correctly, all that. So no, I'm not.
Okay, good. I'm glad you're not going there. I was wondering where you're going to go. So we like simple here for sure.
Right. So, but I would say if you know that, say, in your example, you have recurring monthly, and then you sort of have these one-offs, right? And they're kind of weird times, or it's going to be just a one-off. I would almost break out your revenue so I can tell my recurring monthly. And then if it's easier to just pick up the full amount when you receive it, not the end of the world. But I think at the end of the day, what we're trying to do, like you said, I say the same thing. And this is telling your story. So what I want to show is, here's my monthly revenue, because ultimately we also want to build a budget. So here's the monthly revenue I know I collected last month, which means I'm probably going to collect that this month. But then here's the one-off that I really don't want to assume I'm going to pick up next month. Maybe I do, but I'm not going to assume it. So I think even just separating them out into two different categories may solve that problem without creating too much work. And even on the billing side, taking a step back, it may not be something that you necessarily need to put in QuickBooks or book with that detail in QuickBooks. But I think as an owner, taking back that control piece, you need to be aware of your month or weekly billing. Just like if you were a retail store, you looked at your weekly sales, because this really is your weekly sales. And I think that is a really important way to be proactive, to be honest if things are slower this month than they were last month, or they're booming this month and I'm not going to have time to finish these jobs. Paying attention to what we're billing every week will give us that information.
Okay, so I love that. And that's about the cash flow too. For a lot of service-based business owners, love it or like it, hate it. You're trading time for money. Like, you're billing for a service that took some sort of time. And so tracking how many hours or how many of that package or service that you're selling, if you're doing it on a weekly basis, you'll be able to see trends faster than, for example, if you're not getting your P&L till the 15th for the previous month, and that's best case, getting to the 15th, right? Is that you're already weeks or months behind of seeing, not months, I'm sorry, weeks behind of seeing a trend, possibly.
Yeah. And that's where a lot of this, what I try to tell our clients is a lot of this is stuff that you could be doing on your own, complementing your bookkeeping or accounting service. So it may take them to the 15th to get your reports out, and that's okay, right? There's stuff that they have to do to get there, but that doesn't mean that you shouldn't know your revenue well before you ever see that P&L. It shouldn't be a surprise. And you have your bank statement and your credit card statement. So even if it's a dollar amount, you should have an idea of cash you earned well before you ever see the P&L.
Yeah. So I am a huge proponent of even if you have a bookkeeper and an accountant, you need to have your login, say to QuickBooks. So I use QuickBooks. You need to know where to click and find your P&L. You need to know that you can click on any of those numbers in your P&L and drill down and see if things are being categorized correctly. Like you taking a glance at your P&L, you're going to have an instant flag that something's off. It's your business. Mm-hmm. I don't think that it's right to expect a bookkeeper or an accountant that is not in your business every day to be able to see some of those obvious things that are miscategorized, or if there's duplication, they're not always going to see it as easy as you could see it if you just glanced and took some ownership of those numbers and understanding it.
I agree. And that's where, I think it's a collaborative arrangement where the bookkeeper is doing their things, but they have a lot that they need to do just to get it to final from an accounting standpoint. But again, a lot of the, categorization and, how you want your P&L organized on the expense side. I mean, that's really just the story that you're trying to tell. So that really requires your involvement, because your accountant really cares about the bottom line. If the bottom line is right, that's really all that matters. And the expense classification doesn't really matter from an accounting standpoint. I'm not saying it doesn't matter, but when I'm filing a tax return, if I called it supplies or marketing expenses, really doesn't matter.
Right.
But to you, the owner, it probably does. And so you want this information, where do you want it?
Okay, so this is a great point because if you look at your previous year's tax returns as your business, I guarantee it's like 5 categories. And I remember the first time I saw the expenses like being lumped up, I'm like, they did it wrong. Like I have all these categories. Like, how did they lump it up? Well, the IRS doesn't really care if it's a subscription or if it's for marketing or for your podcast or for this or that. And so I learned that early on. But for me, like you're saying, like, what story do you want to see? I lean towards more detailed. So, for example, we pull out all expenses for this podcast because I want to see how much am I paying in like employee expenses, marketing expenses, how much to host the podcast, which could fall in different categories, right? So we have contractor expenses, we have payroll expenses, and we may have like advertising, marketing expenses, which have their own categories, but within those categories, they're marked Productivity Straight Talk podcast, so that I can see in total how much does it cost me to run this podcast, right?
Right.
That's a lot of detail. The IRS cares nothing about that.
No.
Right?
No.
Okay.
So don't yell at your accountant if they truncated your expenses.
Exactly, because they don't know what, unless you take ownership to say, like, what do I want to see? Which is really what we're talking about today is like, what story can your P&L tell you? Every P&L can tell a different story, I'm assuming, based on how you categorize it and set it up.
Yes.
So for me, I just want to go back to something you said earlier that was really, important. And that was that you could do like a budget. Like you understood that this was your recurring income each month. This is like what you can count on, which means that could correlate to I call it like, what's my cost to keep the doors open?
Mm-hmm. Yeah.
And then it's nice when these, lump sum payments come in, but I'm really running my budget. So I just wanted to echo what you said and say yes. And that's how I do it too. Like I have a number that I know I have to hit for a 0 profit. Like that's to keep the doors open.
Yeah.
And I try to keep that number down, and that's how I run my budget. And so how do I keep that number down, or at least be aware if it's changing, is month over month data. Right? You just click subscribe. Oh, I need that thing and I need that software. You might not really realize it's pushing that number up and up of your monthly overhead expenses.
Yeah, exactly.
So that's when I'm looking at my P&L to say, on average, over the last 3 months or last year, like what is that number for me? And I think that's a good practice for business owners, is to take a look and see how much are your average expenses month over month. Is that a good place to start with a budget?
Yes, I think, and I think the only thing I would add on the services especially is being mindful of things that are lifestyle expenses. So, you may run fuel for your car through there, meals and entertainment, which from a tax strategy makes sense because you're driving to go see clients or you're going out to eat to network. So all of those things are justified. But I think what we really want to be aware of is how much money do you take out of the business before we get to the bottom line? Because I think the other, stressful part can be when you look at the bottom line and you go, oh my God, that's all I made this month, but I worked so hard.
Yeah.
What am I doing? But then we forget that these little expenses add up. So without, being hard on ourselves, I think saying, well, okay, my bottom line shows $2,000 for the month, but I probably have another $2,000 in just lifestyle expenses in there. So I really made $4,000.
Okay.
Because, it's important.
I love that you said this. I've never heard an accountant say this. So first of all, I run these numbers manually myself. So like I get whatever my profit is at the bottom, and it gives me a percentage. And then I also have my payroll that has a percentage. And then I know what expenses are in there that you're calling lifestyle. And I put that together and I'm like, oh, that hits my target goal of profitability. Like, right? Because I'm going to always be incrementally taking more home as the owner, which, can go back and forth with overall profit that stays in the business. So to me, my profit is my take home Plus, I know those lifestyle line items. And then the bottom line profit that's left over at the end of the month, quarter, or year. So this is, yes. Okay, this is really good.
Well, and it's important for owners to know, because I think the other thing you forget is in service, when you go to sell your business one day, your biggest asset is your client base, but you also want to show that you were able to have, this healthy lifestyle. So that's the first question anyone would ever ask if you went to sell. So doing that exercise now is not just for you now, but it's also for you in the future, because, 4 or 5 years from now, you will then have all of this information that shows, well, here's every year the cash flow to the owner, that then ties back to whatever is shown on the tax return. Because otherwise, you go to present a tax return and it's going to show, again, a smaller bottom line. And people say, well, how do I really know, that's what you got? So I do think being aware of the ways that you're paid is very important. And then, really being aware of how you're paying yourself. Like you said, the salary, if you're looking to sell in, 2 or 3 years, it may make sense to increase your payroll versus just, taking a draw or cash when it's available. So, just being aware of owner compensation. And then the final piece on that line is, which I think is the biggest lesson of COVID, is being aware that you are making a choice to leave the money in business, which it should be for growth and all of those things. But fundamentally, if you have, a P&L that shows that it made $10,000 or say $2,000 for the month, that you're making the choice to leave that money in the business for future whatever. But ultimately, especially from a tax perspective, you're taxed on that $2,000.
Say that again, because I remember being blown away when I found that out. I was like, I never got that money. I never spent that money. So say it again slower, because this is really important that, again, I stumbled upon over the years.
Yes. Is that, business owners, you are taxed, and I would say, except for the people that are C Corps, that it's their own little island. So if you're a C Corp, plug your ears. Yeah. But if you're anything but a C Corp, you are taxed on the bottom line of the business, whether you take the cash out or not. And, I think the importance there is that if you've owned this business 20 years and you haven't taken anything out, that is, a tragedy. That you really should take money out of your business when it has money to be taken out. Because, again, COVID time, no one knew if their business was going to survive 6 months, a year, and all of those years that money could have been taken out to a retirement account or a savings account for the owner. I mean, you're allowed, that's what you should do. And leaving it in is great, but I think it's the awareness of, okay, I'm choosing to leave my $2,000 in this month, but next month I want to take out $4,000, or just holding your business accountable, because ultimately as owners and entrepreneurs, we're the last to be paid.
Yes.
And I think even if it isn't a sale or anything like that, that's where a lot of the resentment comes and the frustration comes, is that you're the last to take home anything.
Yeah. And not even at the sell end, it's the day to day. Like, I think not getting a fair wage is a sure way for burnout, resentment, exhaustion, like whether money is your motivator or not. So let's just say that is not everyone's motivator. But there's something to be said to know that you're creating something that can provide for you, for your family, for dreams outside of your business. And, not getting there by saying like, my business needs it, and I'm reinvesting it, or I'm just going to sit on it. In my opinion, it sounds like in your opinion, isn't always the best strategy. I love Shark Tank. I love watching Shark Tank. And one of the things they always ask on Shark Tank when they're like, oh, our business made X profit. And they said, well, how much did the owners take? And then they'll say nothing. And they're like, so that's not your profit. Like, they expect that the owner is getting a fair wage and getting paid, because if it were to be sold or there's partners, they're not going to work for free. Glad you, good for you, but that's not truly your profitability if the business couldn't afford your fair salary.
Exactly.
Yeah. So to your point, so I share a lot on my podcast with my listeners. Okay. So what you talked about looking at like lifestyle expenses. So during COVID, I saw this like uptick of like, oh, like I don't have all this travel expense. I love to travel. I go to conferences. I go to
Me too.
I meet up with a bunch of group of friends that are business owners, right? And so we'll do these like retreats. I traveled pre-pandemic quite a bit, so it was quite the line item on my P&L. So then the pandemic happens, and I was like, dang, I mean, I knew that number, but like I didn't realize how much it was affecting. And I didn't want it to disappear. So I increased my take-home pay because I was like, well, if I can't travel, right? And now I saw that my numbers were being adjusted. Like there was this like inflated profitability, but overall, month after month after month, when I had no travel expenses, that was there very much so before the pandemic. I had to decide, okay, so what am I going to do with it? Do I let it sit there and pay taxes on it anyways? We just talked about that. Or do I take it as take home?
Yeah.
So I just wanted to share that to say like you were right on about the lifestyle, the travel, the adjustments for COVID. Like I lived that out very, very much so. But how was I able to make that decision? I was watching my P&L and understanding my numbers. And that I saw that this expense like was just disappearing. And so what was I going to do with the additional profitability in the business?
Right. So, right. And I think that is where, the whole idea of the P&L, I think the other thing that can be a misconnect, sometimes is looking backwards. Because, it's great to spend an afternoon looking at your 20 and 21 P&L and looking for differences or categorization. But really what the most important piece of information is what's happening right now. Because everything changes every year. You didn't have any travel, but now maybe the decision is that you could have travel again if you wanted to. So if we're not looking at this time, whether it's last month or last week, then we're really not looking at the right information. So I think so many times business owners get very overwhelmed and they think, I gotta go fix 21. And it's like, okay, great. Yes, that makes sense. But again, IRS doesn't care. So if your tax return has been filed, fixing 21 is for your eyes only at this point, which is valuable, but more valuable would be really looking at your P&L for last month. And does that make sense? And all those revenue things and expense categories, because that's the information that's going to make your decision for next month. It doesn't really matter what happened in May 21, because whatever industry you're in, May 21 is vastly different than May 22. So we really want to make sure that May 22 is as accurate as possible.
Yeah, I agree. I mean, there's the recency bias, right? So we know what's going on now, but we forgot what was happening of May of 2021. And it may look drastically different, but we forgot, like we didn't have an entire employee. Like one of our biggest expenses as small business owners is our employees or our contractors, whatever line item that fits under for your business model. And just having one or two difference could just be this drastic difference in your P&L. But you're not really looking at it maybe from the landscape of look at the increased client revenue. And it's just hard to see that picture when you're not within the story. Like there's our theme for today. If you don't understand the context of the P&L, I don't know that it's a real true picture that's going to help you make decisions maybe a year later, to your point.
Yeah, and I really think it's something that I like to say is 15 minutes a day. The sitting down for 4 hours once a year isn't really going to make you a better business owner. It's going to make sure that your tax return is filed correctly, but it's really not going to impact your day-to-day decisions for very long. It may for the next 30 days after you do that exercise, but then you'll forget. And again, then you're not looking at the real-time information or this year's information until we get to the end of the year and it's cleanup time. So I would really argue it's 15 minutes a day, 30 minutes a week, something that keeps it in a regular check-in. Because every time that you look at your P&L, there's going to be things that you see differently or want to do differently or want to look at differently. But it's never going to be something that is a, set it and forget it. I looked at it once and now my P&L is good, because it's always giving you useful information. And I think, the other piece to the P&L, which I like to tell my clients, is they really find that they're getting frustrated with their P&L and it just is not working out. The one thing that you don't see in the P&L is a price issue.
Mm-hmm.
So if you're undervaluing your time, especially in service, that may be the reason that these expenses are out of whack, whether it's your labor or just bottom line. If you're looking at it saying, how could I possibly be losing money? Chances are it's not the expenses. Unless you're absolutely, crazy on lifestyle or whatever. I mean, chances are it's a revenue issue. So I try to get my clients to think a lot of times when we get into accounting, it's really that, looking at your operating expenses and what can I save? And that part is valuable and true. But the one thing that the P&L will never tell you is if you're undervaluing yourself or undercharging. But if it doesn't work, then we have to look at revenue because there's only so much you can cut to get the bottom line to work. But revenue, sadly, solves most problems. So
Yes.
I really try to get people to look at that. Like you were saying, look at your recurring monthly. If you know that you only get these one-off once or twice a year, then the recurring needs to be high enough to pay your expenses every month. And if it's not, then focusing on what should that revenue be? Or like you said, which is so smart, your break-even point. What do I need to bring in to make sure everything else works? Because that's going to be the things that, move the needle and make it where the P&L makes sense.
Yeah.
Hey, do you feel like running your business is a constant struggle and you're sick of doing it all alone? It's time to get support. Go check out Amber's business coaching and training program, Leverage Lab. It's designed to help you take back control of your business and propel you to even greater success without having to sacrifice your personal life. If you want to increase profits, reduce stress, and run a business you actually love, go hit pause, click the link in the show notes to find out more, and grab your spot in Leverage Lab.
So just to reiterate, my break even is not the goal. It's just the number I'm very aware of. Yeah. Okay,
no. But you have to know that.
You have to know that number.
You have to know.
Well, because I can watch a trend. I've been in business 10 years. I can watch and ride a trend. It's just how close am I going to get to that break even number where I'm comfortable? And because I have experience of watching my numbers, I'm not going to panic when 1 week is down or even really even 1 month is down. And that's, I think, the power to what you're saying of being in your numbers and understanding your numbers on a daily or weekly basis is you're planting those seeds to educate yourself for decisions you need to make in your business in the future. And the P&L for me is a tool that I use to help me make better decisions in my business. And if I don't understand those numbers and I don't understand what it's telling me, I'm just going to react, right? So like if you're not getting your numbers in order until February, March, or April for the previous year, that's the most reactive thing you could do. There's literally nothing you can do. Yeah. Better case is like, okay, you open the books like October, November, December and see like, do you need more write-offs? Do you not? Okay, that's an improvement. But what's better is you're watching it every month because once I got there for me, I wasn't waiting till December to have an extra expense. I wasn't waiting till November or December to invest in my business. I was looking at what needs to happen on expenses, but also, to your point, what needs to happen with revenue. Because you may have this idea in your business. This is like business strategy. Like you want to start a new offering. Okay, what is that going to take? Is it going to take another employee or another like startup of a bunch of marketing expenses? Can you afford that? Your P&L needs to tell you if you can float those expenses and like, is there money to do that?
Exactly. Yes. No, 100%.
Yeah. Okay. Oh my gosh. This is like, we touched on so many things. So the P&L is super important. And my goal, I think Anne's goal here too, is we want to empower you to understand your numbers. If someone's listening and they're like, great, like I hit view on my P&L and the number's completely wrong, doesn't look right. We understand that it's because of the numbers that are being put in. So either deposits or invoices and then expenses. You know, I've seen duplicate expenses, miscategorized expenses. Where does somebody go to at least start accurate so that moving forward when they're looking on a weekly basis or a monthly basis, they're comfortable these numbers are accurate? How does someone get help? Like, what does that look like?
So what I would say as a starting point is I like to recommend tracking your cash flow as a check against your P&L. So I think the most empowering thing you can do as a business owner, if you know, especially if you have an accountant or bookkeeper who's handling, that is, but even if you're doing it, I still think tracking your cash flow every day will give you peace of mind when you're looking at your P&L. We know that they're going to be different for reasons of collection timing, to paying down loans, to put all expenses on a credit card. I pay the credit card once a month. There's always going to be what we call in accounting timing issues. But as a business owner, the most important thing is your cash flow. You need to know that you are making money every month. And if that is the need, and it is for every owner, then tracking your cash balance every day can be the most empowering thing that you can do. Because then if you see your cash go down, you can respond. If you see your cash go up, you can respond and do different things. But if you have no idea for 30 days, then chances are the decisions you're making are wrong.
Yeah. Okay.
So if anyone is interested, I do have like a Google sheet that we send to people, but it's the most important thing you can do is literally, because everyone says, I look at my bank balance. And that's great, except for the fact that there's so many moving parts. As a business owner, you haven't said what that bank balance should be. Okay, so I might log in and my bank balance is $20,000, but I don't know if that's good or bad. So when I look at that number, all of a sudden I have anxiety. And I know I'm in the same boat as everyone else who's listening, that, I went for a long time avoiding my bank account because I just didn't want to look at it. It just stressed me out. But then during COVID, it was like, okay, I need to know every day where we are because so many things are changing so quickly. Yeah. So I sort of developed this tool during COVID, but it really works because at least then I can say, okay, it's 20,000 today. It was 19,500 yesterday. All right, like that's good. But if it was 25,000 yesterday and now it's 20, why? Okay, well I can see like my credit card payment came out this month or my sales tax came out this month or whatever it is. Okay, that makes sense. But I'm looking at 1 day's worth of transactions. And especially now when you also have, forget the owner part, you also have employees with credit cards, you have online activity. Mm-hmm. It is a really good control to make sure, okay, yep, those transactions make sense for yesterday. Here's my bank balance, and here we go. I do it every morning without fail, and I can tell you it just creates this empowerment of like, okay, I know where we are, and it makes sense, and now I can go run my business for the day.
Yeah. Okay. I love that. So we're going to share with people how they can get that from you and everything at the end. One of the things that we kept saying was the story, that the P&L should tell us a story. And I want to be very clear because with stories, they can work for you and against you. Yeah. And I always say, like, you want the data so that you're actually not telling yourself a wrong story or a negative story. So when you had said, for example, I looked at 20,000 and like, is that bad? Is that good? I don't know. Like, I don't want you to look at that number through your own filter of just like making a lot of assumptions. You need to understand, is 20,000 for your business like a hell yes, because you understand your expenses? Or is it like, oh my gosh, I'm not making payroll? Like, that's real factual information. And for me, it's important to actually help remove those emotions and those assumptions and the story, because we're not wanting to invite anxiety when it's not needed. So we want the numbers to kind of set us straight of like, okay, so it's a number. And like you said, it's a number. Do I need to do something about it or not do something about it? Right.
Right.
Like invoke action or decision making, not freeze you with a story that doesn't serve you well. Like, that's not what we're looking for here at all. I just want to be really clear with our listeners.
I completely agree, because I think the hardest part of being a business owner is, like you said before, that you've sort of been thrust into these other areas of the business that you may not have dealt with before, or you may not want to deal with. But I would argue to any business owner who says, I just don't want to deal with that I guarantee you have thoughts that you're dealing with it, that you're just not admitting to. I guarantee it's stressing you out at some level. Whereas, like you said, if we just deal with it and we say, okay, it's lower than I wanted, what can I do today to make it better? That's going to be such a better mindset than avoiding it, because avoiding it is just it's not a good place to be.
100%. So I wanted to touch on something also around the cash flow. So you were sharing, you have this worksheet on cash flow. Cash flow is important. I want to share a little story of a client that will remain nameless, but pretty much it was like, oh my gosh, like we're like out of money, like no money is coming in. And I was like, okay, that doesn't make sense because you've been telling me all these clients that you have and the business is growing. Like, let's look. And what it was there was no process in place to check and make sure invoices were being paid. So invoices were going out and that's what they were watching. And he's like, good, invoice client. But what got missed there was just this mechanism between his accounting company and his internal admin team and him of like, okay, so like suddenly we have all these outstanding invoices and that's how quick it happened. He's like, there's like no money. Like, I don't know how I'm going to hit payroll. So I share that as a lesson learned that all it took was adding one line item to his agenda with his right-hand person, his office manager in their weekly meeting to say, what are the outstanding invoices? What's that number? Who are they? And then he made the decision, like, do I need to get on the phone and start asking for invoices to be paid, or can she just follow up? I say that to say this is so empowering that like, yeah, that was a really shitty experience for my client. But all that it took was like, how do you make it part of your process to watch that number on a regular basis and then understand you can take action quicker because you're watching that number every Monday, that the calls can be made to make sure invoices are being paid on a regular. Because let's face it, nobody got into business because they like collecting money from clients, right? Like, no, not at all. But it was a process that was missing that he was paying for months. I mean, this could have been an accumulation and it was just like, again, timing. You used that word many times. And it just happened to hit home and show there was a process missing.
Yeah. No, and I agree. It's a small adjustment in the grand scheme of things. But it is something that I would argue only the owner is going to take care of, because you may have someone who's involved in collections, you may have someone who's supposed to send the bills out, but this is a very critical piece to your business that you have to be aware right away, because waiting 30 days on collections, it just will never work out. So as much as we want to delegate, and that's important, I think keeping, like you said, that checklist, like I'm going to follow up once we can make sure it was done, it's just going to make sure that, there's no hole.
Right. I mean, 2 minutes on the agenda. I'm not asking that this is his new role in the company to go do collections. But when we just say things like they have it figured out, we don't have that luxury as small business owners. It's not like we have these whole departments that's like accounts receivable, accounts payable, a CFO. Yeah. Like you don't have all these layers. You have one or two people. And people need to be led and held accountable. And part of that accountability is like, are invoices being sent out on time? Are they being followed up on? And at the end of the day, it's like the buck stops at you. Like you're going to feel that pain if you're trying to figure out how to make payroll because you weren't watching that.
Yeah.
So, yeah.
Yeah. And I would also argue that, I think technology is your friend. So if you're able to do electronic payments or, ease the ways that you make collections with your clients. It doesn't have to be done the same way that it was done 20 years ago, which is a good thing. And I think, if you look at, most clients are going to be very understanding if you're asking for an invoice. They know that they have an invoice, or at least they should. So, I know it's so hard as entrepreneurs because we want to make our clients happy. But I would also say that in some ways goes back to how much you value yourself. And your time is worth money. It's your most valuable asset. So if you have devoted time to the client, then they need to be aware of it, just like they would any of their other expenses. And you will value yourself more when you hold a firmer line on collection.
Absolutely. So I'm going to share one example because I had to learn this the hard way too. So this is like Amber's Hard Knocks episode, apparently. Is I used to invoice my clients, monthly coaching, they'd send the invoice. I mean, payments would come in from the day I sent them to like 10, 15, like everyone knew it was due on receipt. Everyone knew it was due monthly. And I was just like, this is BS. Like, And again, you have to challenge just because it's been done that way or that's the way you learned doesn't mean that has to be how it's always done. Well, they would, not pay through credit card. They would send me checks or we're talking early in my 10 years ago. Okay. So don't laugh. And then I was like, is it worth 3% to me to have a credit card on file and just the payment comes out every 30 days? And immediately that was the easiest yes to that expense.
Yeah.
We don't handle anything far and few between. We have it all set up that if a payment fails, they get automatic emails and it all gets taken care of. But literally because I was willing to pay the credit card fee, have it set up on an automatic payment, there is no more issues with collecting money or having to have those weird conversations with clients. Now, my business model is coaching on a monthly basis for the most part, but there's a lot of other service-based business owners that if you get creative, that says can we get a credit card on file? If it's not paid by the 15th, then we default will run your card. Get creative with what would solve having to have awkward conversations because they already agreed to pay you, or can you set them up on some sort of recurring payment? It's worth reevaluating how you currently get your money from your clients, I think.
I agree. And I just don't think that in service you should be afraid of it because like you said, they've already agreed. So
that's right.
Just ask yourself, am I afraid because I doubt that I'm worth this? Because you're 100% worth it. So you have to just ask because they've agreed and this is your business.
Yeah, for sure. Okay. And then I have one more tip. They're just floating out of me. Okay. Is that if it is weird for you to ask for money and you're not quite there where you have an assistant, feel free to set up an assistant account and send a client email that says your invoice is due from the assistant or the admin. I'm not saying lie by any means, but if you just needed to have an automated email that goes out from an automated admin account, it's okay because you're just creating this process, especially if it's really important to keep the rapport between your client and you don't want it awkward that the payment failed or that they owe you. Set it up as your business may look in 3, 6, 9 months when your business is getting bigger and it's not just you. So I'm just kind of green lighting, get creative, find out what your stumbling blocks are, but you have to fix any stumbling blocks with asking for the money that's owed to you.
I would agree. And I would say, I think, and I'm with you, I've done this, this is my 10th year on my own. I've been in accounting for 15 plus years. But I would say, in accountants, we talk about this a lot because we're service as well. And, 2 pieces of advice that I would give and that have always stuck with me is one, one of my mentors said at the beginning, he said, every one of your clients will leave you. Just be aware of that.
Oh, yeah.
And I was like, oh, that's horrible. But it's kind of true, right? That over time, the relationship will end. So just be aware of that. Not that you're not going to do your best, but it will. But the other thing I would say, for my 10 plus years being on my own is that every time I have been afraid to ask for what was owed and I have continued to give away my time for free out of the goodness of my heart, right? I love this client. I really want to help them out. I know they're struggling. That time was never valued.
Never.
Every time. So, because there is a psychology of pricing that you basically told them it's worth nothing. And they don't know the accounting world or billable hours or, however you come up with your pricing, they don't know that. So you basically undervalued yourself and given away, and I would say to the detriment, the times I've done it, I've ended up losing that client anyway, and it just because they did not value it. So whatever the relationship is, and I know, good economies, bad economies, there's going to always be these conversations. I would just stress to show the value of it. Even if you end up making an arrangement with them, they will not hate you for showing that your time is worth thousands of dollars because it is.
Yes. Have it show up on the invoice, right?
Yeah.
And even then it's a gamble if they value it because you really had to make a decision and it was hard to, you probably kept you awake as a business owner. Do I invoice them? Do I not? And they're like, thanks. And then pay it. And they don't think twice about it. Such a great place. I feel like we should be having you back to just talk about the value of charging for our time and how that affects. Because one of the conversations that comes up often is like, oh, I just write off that hour, I write off this, I write off that, which, okay, you think it's fine one off. But my challenge to my clients always is, I want it line item that you wrote it off. I want you to track it. And at the end of the month, they are just shocked because, again, the recency, they're like, just this client, just this 2 hours, just that 2 hours. You multiply that over your clients and how much you charge an hour. It pretty much stops that behavior pretty quickly. Once I have my clients tracking that, there's mindset work. There's things that actually have to happen behind the scenes. It's not that easy. But the first thing is acknowledging how much you're actually writing off. This would be a great conversation for us to have again.
This would be a great conversation.
Yes. Okay. I can totally say we're going to have like a part 2 to this. So those of you that are listening, diving into how that affects your business and the numbers and, how do you work through that mindset? Because, it's time to close out, but you do have a podcast that is about mindset. So share with us about your podcast and about your company and how people can connect with you after today's episode.
Yes. No. So my podcast is called Shotmaker. So it's all about mindset, really kind of drawing along the lines of the interaction between sports and business. So, and
I thought it was shots like bartending, like alcohol. So there you go. It makes sense. You golfed. Okay. Got it. Shotmaker.
And that really was kind of my way of, like you said, creative outlet. Because I find that I talk about mindset a lot, even though I'm an accountant. So that really is where that goes. But we, since COVID started, we as a company have offered free resources to business owners all over the country, really with the idea of educating business owners, because I think anyone who, thinks the last 2 years have been hard, realizes that it's not going to go back to easy anytime soon. And that in a lot of ways, amateur hour is over. And we all have to really know, like you were saying, all those roles as a business owner, or it will be to the detriment of our company. So we're constantly offering free courses, cash flow, all of those talking points that we all just need to get better at as business owners. So please sign up on our website, and the courses are free, and I think you'll find them very useful.
Okay, so what's the website and the company name?
So, thelargogroup.com.
largogroup.com. We'll make sure we're linking out to that in the show notes and everything. You'll be able to grab that. This has been a phenomenal conversation, and I'm sorry it's coming to an end. So we definitely need to figure out how we can have you back on the show. Thank you so much for providing your insights and value to our listeners here at Productivity Straight Talk.
Well, thank you so much for having me. It was great.
Thank you so much for listening to this episode of Productivity Straight Talk. Once again, I want to apologize for the quality of this recording. It is not our norm, and I sure hope you found today's episode to be incredibly valuable. But I need to be straight with you. No change, no change. Without taking action, nothing will change for you or your business. So based on my conversation with Anne and the things that were discussed, what is one actionable that you can take, that you can commit to taking that moves you forward with feeling more comfortable with your profit and loss, by reviewing it, by being comfortable and confident that the numbers are accurate? Perhaps the first thing it's telling you is that the data input in the system is not accurate, therefore your P&L is not accurate. Maybe the data is accurate, but the P&L is telling you that you're overextended. You are spending money in too much of a place. Or maybe there is a service offering that is not as profitable as you expected. Again, there is so much opportunity for the data to tell you what next moves you can make strategically in your business. But before you can do that, you have to know that the data in is accurate to have confidence that your P&L is accurate. So with that in mind, what is that very next step? Maybe it's just asking your accountant, your bookkeeper, or logging into your accounting software, whether it's FreshBooks or QuickBooks, and hitting the little button that says P&L. Sit down with it, review it, see what questions you may have or things that you don't understand, and seek out a professional that can guide you in the right direction. And lastly, If you would like to go deeper and get further support in your business, you want support around business strategy, time management, leading your team, building your team, organization, business systems, then I invite you to check out my business coaching, accountability, and training program, Leverage Lab. You can do so by heading on over to amberdelagarza.com/Leverage Lab. So that's my straight talk for today. Until next time, have a productive week.